We're going to do some trading with Scott Bauer, CEO of Prosper Trading Academy. So Scott, Applied Materials, pretty strong move here so far this month. We're going to get more of that, or you want to fade it?
No, I don't want to fade it. I think you guys hit the nail on the head, both technically and fundamentally. This stock is really humming on all cylinders here. So I really like the upside. I think we're going to break out to all-time highs. I really do. So what I am doing is I'm employing a calendar call strategy. I'm basically what I'm doing, because I think the stock's going to move higher. I'm buying a December expiration 165 strike call. But to finance the purchase of that call, I'm selling next week, not tomorrow, but next week's 165 call as well. So I do that as a calendar call spread. I bring my debit down to $1.60. That's the most I can lose here. Optimally for this position, I want the stock to be as close to 165 as possible next Friday at expiration. Because what that will do is my short option that I have, that's going to whittle down to zero, while my long option not only kind of keeps value, but increases in value a bit.
Okay. The 165 call in December, and then selling the November behind it. So Scott, you think about this as a trade that you wait out, that you're going to be likely holding this through the duration?
Well, there's two ways to look at this, Oliver. There's a massive implied volatility difference between next week's option and the one out to December. And there should be, because that always happens leading into earnings. You always see implied volatility really pick up, especially on the closer term options. So if we get a nice upside move tomorrow, I may actually take this off if this spread appreciates enough. Enough for me would probably be about a 50 to 75% increase in the value of the spread. But I also may look, and one of the beauties of having a calendar spread is the ability to roll out and buy back the short option and sell one that's even further out, maybe the following week, 2 weeks out, to collect more premium against what I've spent on my long option. So a calendar strategy really gives flexibility, and it gives the option to really be able to maneuver the spread. So depending on what happens here with stock direction and with volatility, I might take it off tomorrow. I may hold on to it and want to roll out a little bit.
Okay. So Scott, I like it. Pretty interesting way to approach this, with an open mind, not trying to specifically pinpoint to where it's going to go. I mean, obviously the trade has the apex pretty specifically, but you can still make money in a pretty wide range there. And I mean, who wants to fade a chip maker after NVIDIA, right? I mean, that's just suicide.
You know what? It's like I said, you guys were talking about this. It's hitting on all cylinders. If the stock were to drop here, okay, just below here, when I say just below, I'm talking about 146 to 147 area. That's a pretty big buy area there. So if the stock were to fall there, I think there's going to be lots of support, lots of buyers coming into the marketplace there. So, if we get some number here where we see a little bit of sell-off, I think it can pop back pretty quickly.
Okay. Hey, Scott, overall, when you look at stocks churning just below the highs, NVIDIA up 10%, should we be looking for a record here in the NASDAQ? I mean, we're just so close, but having a little bit of trouble following through this morning.
Yeah, it'll get there. I think there's just so much overriding news out there across the economy and the commodity space that investors and traders, quite frankly, are just a bit hesitant right now. But to me, the definite direction, there's still a lot of tailwinds behind the marketplace, and that direction is still to the upside.
I got one more for you, Scott. Well, we got you. Yesterday, a few days ago,
57.5.
There you go. Say it again.
57.
All right.
Same as we talked about the other day.
Oh, man, I'm getting too predictable. Okay, I was going to ask about Bitcoin. That's what Scott's referencing there. The level that you told us the other day, you'd be ready to buy the dip on this thing. 57.5, we're getting pretty close. And Scott, what kind of trade makes sense for BTC when you're trying to buy a dip in a fading market? Do you hedge it? Do you keep a little bit of money on the side in case it slips through, or what kind of trade makes sense when you're trying to buy the dip like that?
Yeah, I don't think you go all in. I don't think, especially in Bitcoin, you don't ever go all in. I think you want to, gradually. But let's say I wanted to, invest X. I probably invest half X or maybe even a little bit more than that at that 57.5 area. 55 would be the next dip below that. So if it bounces off 57.5, great. I bought some, it bounces. If not, it gives me the opportunity to buy it just a little bit lower as well.
All right. Thank you, Scotty Bauer, CEO of Prosper Trading Academy and mind reader. Mind reader. I guess I'm not that hard of a read when it comes to what I like to watch in markets. All right. Thanks, Scott, joining us from Prosper Trading Academy.